All right, all right. Good to see everybody. Show of hands if you guys don't have your cameras on. How many of you guys have heard of the market Sudbury, Ontario, and is know what's going on there in the real estate side of things? Show of hands. Is anyone familiar with Sudbury, Ontario? Bruce, good to have you. If you guys don't have your camera on, feel free to use the chat box. Okay, Julie's familiar. Great. Awesome. Your name's Connor, but I don't think that's correct right now, but see a couple hands. Carolina, good to see you. I know Garrett's familiar with Sudbury. Eric is. Anyone here not familiar with Sudbury? It's totally okay. Like, no idea where it is, somewhere in North Carolina, voting again. Kind of familiar. All right. So, my name's Zach Cahill, and today I'm here to tell you guys how to spot a gold mine market and why we chose Sudbury. All right. I am really appreciative for you guys to be joining, especially the ones that have their cameras on. We're going to try to make this an interactive session, and I know Thursday night, 5:30 p.m. Eastern. There's probably some other places you might have got offered to, but instead you're deciding to spend the next 45, 60 minutes with myself. So for that, I am totally grateful. And to really get the most out of this session, whether you're on the live or on the replay, just try to tune in. Looks like we got Ann jumping on the call as well. So tune in, put your phone downs, guys. Um, this webinar is going to blow your mind. Okay. I'm going to cover three distinct things. Number one, I'm going to review the 8 drivers of the real estate market. If you were on the last call, you kind of got a glimpse of that. We're going to go into each of the 8 drivers. We're then going to show you specifics, the ins and outs, and what's going on in the Sudbury market. And lastly, I have a giveaway. Whether you're going to be investing in Sudbury or not, I'm giving away a market compass that you guys will be able to use for your market and kind of rate it to see, where does it stand depending on, the 8 drivers. So super excited to share with you. So if you guys have any questions or comments as we get through this, again, chat box is all yours, and we'll have time for Q&A at the end. For those that you don't know me, my name is Zach Cahill. I started my journey back in 2017. At that time, maybe like yourself right now, I was analyzing different real estate markets. I had no properties. I hadn't taken any action. Okay. Fast forward to today's date. Um, Over the last 8 years, I built a portfolio valued at over $40 million in the market of Sudbury. Completed over 250 transactions, and we have about 220 units right now in Sudbury. So when people think about, the market Sudbury, I like to think I'm know what's going on, an expert, but still always learning. And I think, guys, being transparent, this is probably the most effort I have ever put in to building a presentation. Okay, like the amount of hours that's went into research for this, and you guys are going to get all this information hot off the press. And even I was, learning as I was going through this process. So I'm going to go ahead here and share my screen just to make sure you guys can see that okay. BJ, good to have you on the call. Seeing a lot of familiar faces in here. So just give me a thumbs up when you guys can see my screen here. Can everyone see this? Perfect. Steve, nice to see you. You made it. Garrett's giving lots of thumbs up. So we're going to jump right into this. And I'll say, for those who are on the last call, part of the reason for my success is, or part of really the struggles when I was first starting out, is there's so many avenues of real estate, like so many different things that come with a real estate investing business. And for those active investors, Steve, I know, you probably can agree, like, there's legal aspects, there's financing aspects, there's acquisitions. And I felt really like scattered in the real estate world. So what I've really created with is this model, okay? And it's called the Investor Operating System. And this is what we've built our entire business around. Now, I am going to go through it fairly quickly, just so that we can get in kind of the meat and potatoes of the presentation. So before I do though, like my lawyer advised me on the last call that we definitely need to have a disclaimer. So again, I'm not a, lawyer, accountant, financial advisor. I'm just giving you guys education. All right. Everyone cool with that? Just free education. That's what it's all about. And that's why we made this iOS model. I know, there's all these real estate investment groups and networks, which are great, and they cost a lot of money to join. And this iOS, what I'm releasing, it's all free. There's going to be giveaways at every single event, like the one that you're seeing. And if you sign up for one of them, you'll automatically be registered into the next event. And they're usually about every 2 weeks. All right. So this is the model that that I had created. And I'm curious to ask you guys, like, why is everybody on the call investing in real estate? Just put it in the chat box, or even better, if you unmute yourself, like, why are we investing in real estate, guys? Open the chat box here. Why are we investing in real estate? What are we after? Okay, Josh says long-term gain. There we go, building wealth, and keep the answers rolling. So as I was going through this journey as an investor, um, oh my goodness, Connor can somehow draw on my screen. I don't know how to turn that off, so Connor, you might have to figure that out. As I was going through this journey, what I really was excited about. Oh, perfect, thank you. What I was personally really excited about, we'll write this in the middle, was hands off generational wealth. Let's do short form. Because when I bought my first property, I realized like, okay, this is another full-time job. So I really built this system for investors to really gain the hands-off generational wealth. And what comes with that high investor generational wealth are things like the answers that you guys are putting in the chat box. So I already saw, someone mention lifestyle freedom, um, long-term intergenerational wealth. I know that's something that, Garrett, you've mentioned multiple times to me before. And one of the pieces that I think is missing is this one right here, high investor confidence. Who would like to have high investor confidence, whether you're investing passively in someone's deal or raising capital from someone else? Investors need to feel confident. There is so much, stuff that has happened over the last years in real estate. It's really hard to build that trust with investors, never mind to maintain it, right? It is so true, and it's not talked about enough. So I knew that when I'm building this hands-off generational wealth machine, it needs to provide investors with the high investor confidence. It needs to show them that you can build long-term generational wealth and ultimately have the lifestyle freedom that they desire. And in order to get that, I found that there's three main drivers to achieving those desires. Okay. Those main drivers were number one, acquisition. You must be able to buy the property right. If you can't do that, nothing else matters. All right. There's another massive driver, operating with excellence and integrity. There's no way you're going to get that high investor confidence if you're not operating every single day with excellence and being integral, truthful to your investors, even if things aren't going as planned. And lastly, number three, optimizing for financial freedom so that you do have that cash flow to being able to go and spend it. Okay. So after we have these drivers, we're going to go one level deeper because what I found is there's actually three main things that would affect something, let's say, um, like acquisition. Okay. So the first big lever of acquisition is actually selecting the market. Okay. Who would agree? Any show of hands, who would agree how big the market plays a fact? Doesn't matter if you have everything else right in as you can see, there's 9 levers. If you have all the other 8 levers correct, but you pick the wrong market, everything's going to fall apart, right? You're not going to have that consistent cash flow. You're going to have high vacancy rates, etc. So this call today is 100% focused on this lever. Again, I just wanted to show you guys the overarching model and where we're going. There'll be another lever on the next call about lead generation. We'll have one specifically on deal underwriting, and then we'll go into the next driver, which is operating with excellence and integrity. Integrity, we'll look at legacy planning, asset management, investor reporting, and transparency. And then lastly, we'll finish it off with the last driver. We'll do an exercise called the gap to financial freedom. We'll look at ways to maximize your cash flow. And lastly, how to do strategic renovations and proactive maintenance. So each of these levers that we're discussing will be a full, 45, 60-minute deep dive into that topic. And I think that's the best way how I can share with you my total investor operating system because there's so much to cover. Okay. So who's down? Who's excited for this? Because this is like again, uh, I know I'm pumped. Now, the last call we did was actually on the acquisition, and we briefly touched on the three levers: market selection, lead gen, and underwriting. Okay. One of the biggest things that came out of this is the flow of how real estate markets grow. And I'm going to ask you guys put your answers maybe in the chat box or unmute yourself. What do you guys think like the number one thing is when we're looking to see if we should be investing in that market? Like what type of things or measurements, stats are we looking for as investors? And there's kind of no wrong answer here. I'm just going to help you organize this into the way that I've had the most success. Okay, great answer, Steve. Track record, mitigation, employment, population growth, vacancy. Yes, these are all phenomenal answers. Kevin and Steve, you guys actually have the really great answers. And what I've found is the number one at the very beginning is actually job growth. Job growth really kind of sets the stage for all of those other factors. Okay. So when you have that job growth and you have infrastructure investment by the city, by the nation, by investors, building things, opening up businesses. What happens when that job growth happens? Like someone already put in the chat box. When there's job things that are good paying jobs, what are people doing? They're moving there, right? So the jobs then create population growth, right? And this isn't not rocket science. Once you have, population growth, what is going to happen? The rental demand will increase. There'll be more tenants. So what happens to vacancy rates when there's more tenants? The next one is decreased vacancies, right? There's less places for people to live. Pure supply and demand. Once vacancies go down, what happens to rents? They go up. Rents increase. When rents increase, what happens to prices of properties, whether it's multifamily that are based on net operating income and cap rates valuations, or just having a surplus of renters who now want to buy a home? Supply and demand again. Property prices appreciate. And lastly, when investors, like sometimes I get a lot of the answers, from investors saying, "Oh, I'm looking for a market that appreciates lots." The appreciation happens over here, guys. It's like one of the last things that are going to happen. Investors are going to get attracted to the markets. They're going to invest in the same market, and this cycle really just starts again. It just repeats and continues. Last piece here on the tab, you see generational wealth security. Because at the end of the day, when I showed you our model, the iOS model, in the very center is that hands-off generational wealth. So there's no point of building this wealth if it's not secure, if it's not able to be handed down through generations. And multifamily, in my opinion, is by far the number one real estate investment strategy to create that generational wealth. And I know I'm not the only one on the call that believes that. Okay, so we're gonna go through these a little bit slower, and I'm gonna show you what 30 hours of research online has found us. Again, if you're not familiar with the Sudbury market, this is going to be eye-opening, and if you are familiar with the Sudbury market, it's still probably going to be eye-opening. Okay, so back to number one: job growth and infrastructure investment. Okay, Sudbury has really five main categories. The first being, and I apologize, guys, there is a lot of text on the slides. If you're used to my calls, I usually don't do any text on slides, but I want to make sure to capture everything. So I like to really call Sudbury like the hub of Northern Ontario. So healthcare is massive. Largest hospital in Northern Ontario. You can read on the slide there, Northern Ontario School of Medicine, a ton of research being done in the cancer fields, and there's 700 businesses in healthcare and life science center in Sudbury. It's a
What did
massive,
you say, Joshua?
massive. And yes, I will be sharing all the slides. You don't have to type pictures. Everyone will get the slides.
Yeah, if you want to help Terry, that will be good.
All right. I think I need to there we go. Need a co-host next time. So healthcare, massive industry. Education, again, the hub of Northern Ontario, multiple colleges, Laurentian University, Northern School of Medicine, Cambrian College, College Boreal, really the hub of Northern Ontario when it comes to schooling, post-secondary. Clean tech is also a big part of Sudbury. Like, I mean, I'm sure if anyone is familiar with Sudbury, you think mining, you think like dirty, smoke, etc. It's actually really transformed to becoming one of the global leaders in environmental remediation. And you're going to see more about that throughout the presentation here. Just the general retail and workforce is massive, 12,000 small businesses, strong bilingual population as well. Um, Tourism and film industry, very interesting. Sudbury is attracting 1.2 million people a year to visit on tourism, and they're spending over $200 million a year. The film industry as well is another $200 million a year industry. So it's not like all of it is anchored into one aspect. It is diverse in the economy. It is, producing a lot of jobs, which is what we like to see as investors. And lastly, the biggest industry obviously being in mining, it is absolutely massive, 15,000 jobs. Um, just Valet alone, Valet and a couple other groups have invested over $1.3 billion to grow the mining sector. Like it's not going anywhere. It's just getting exponentially bigger, especially when you look at all the need for EV vehicles, electronic vehicles all over North America. The batteries, the minerals for the batteries, guys, are coming directly from Sudbury. So Sudbury has a direct partnership with Tesla to provide all the Tesla vehicles with the resources that they need. Okay. Again, another highlight here, $5 billion in cumulative investments by some of the larger companies such as Wyloo Metal, Vale, and Glencore. Okay. So mining, this is really the first catalyst is all these five drivers working together to create these jobs. Okay. Now, what we're seeing with that is population growth. We have these jobs. People are moving to Sudbury to work there for a variety of reasons, okay, which we'll kind of go through. And population growth, I put this slide together just before this call. This is the population graph of Sudbury from 2001 to 2025. Look at this line. That's the line in Sudbury. So 4%, almost 3.7%, we're now at a population of 191,000. The city can't even keep up. I'm pretty sure when you're driving to Sudbury and you see a sign, it's like saying 168. The population is almost 200,000 people. So this trajectory, we had a lot of flat growth in previous years, and everything is ramping up. And when people are moving to Sudbury, again, guys, um, I'll just talk about this for really quick. People are not just moving there for those jobs that I mentioned, the drivers. There's a couple other pilot programs in place, students moving to Sudbury, and a lot of individuals from the GTA moving to Sudbury for affordability reasons, which we'll cover in a little bit more detail. Okay. So when we have the population growth, it's increasing the demand for rentals, right? There's just more renters there. So again, this is not rocket science. I've just kind of compiled this data in an easy way for you guys to digest, including myself, so we can see it. So tenants are moving there. Some of the strongest tenants avatars we're having right now are students, healthcare professionals, and people in the mining industry. Those are kind of like our, young professionals that we're looking to rent to. And as they move, the vacancies are drastically decreasing. So Sudbury has one of the lowest vacancy rates in all of Canada. Okay, we're looking at vacancy rate in 2024 of 1.4%. I did not have the stat for 2025, but it will be similar. So it's much below the Ontario average. And meanwhile, a place like London, where I live now, I think it's had the highest vacancy rate in the last 5 years. So you kind of got to again look at these, these metrics. So vacancy rate is super low. We're looking at 1.4%. And then what happens to rents, right? Rents are going to go up. There's not enough places for people to live. This number shows that from last year to this year, the year-over-year rents for a two-bedroom apartment have gone up 11%. Okay? They've averaged 5.5% compounding increase for the last 5 years. So for the last 5 years, every single year, the rents have gone up 5.5%. Okay? Because of the supply and demand. And when, I just wanted to, this is an interesting stat that I actually found as well. Turnover is actually decreasing. So it kind of makes sense because people are more likely to stay at places longer. Maybe they don't want to move out because they're going to go to a place that like they're paying a good rent. They don't want to move out because now they're going to be paying a higher rent, if that makes sense, especially in Ontario. But it also increases stability. So, on average, about 8.4% of tenants are moving out every single year in Sudbury, compared to previously, it was almost 14%. So that's offering more stability for real estate investors who are not having so much of this tenant turning over. I wanted to kind of point out one quick thing here, just for the multifamily investors in the group. Because a lot of the rents are low, what is tending to happening right now is a tenant will vacate and you can just increase the rent. Maybe you have to do a little bit of renovations, but I'm telling you, most of the time you don't. So this is showing that if you're able to, a tenant moves out and you're able to increase the rent just by $300 a month in a multifamily building, that's adding $57,000 of value to the purchase, like to the value of the building. Okay, so this is really how we've made our money as real estate investors is through owning real estate for a long period of time and letting this tenant churn happen, like letting people move out. If you've been on other presentations with myself, you know that I'm don't really use the cash for keys strategy. Instead, just holding buildings long term, preferring to buy vacant buildings, that sort of thing. So it just goes to show you how a few $100s a month could increase the value of the building drastically. So everyone probably wants to see, okay, well, that's great. What happens to the property value growth? And this graph that I'm about to share, um, I didn't have time to go like I basically what I'm going to do is going to measure over the last 10 years of what the purchase prices were in Sudbury and then look at today and just draw a straight line between the two. Okay, I'm not showing accurate data for all the years in between, just for the sake of time. But what I will say is there's been 100% growth, 100% growth in the prices in real estate over the last 10 years. 100%. If you bought a property in 2015, the average purchase price was 250,000, 247,000. Today, that same house is 501,000. It has averaged 7% per year compounding increase year over year over year over year. There is, I don't even know if there's another market in Canada like this. Maybe there is, maybe there isn't. But it's just phenomenal growth. You see a lot of other markets currently right now. I know London, markets around the GTA are struggling incredibly. Like the depreciation, they're going the opposite direction. Meanwhile, a market like Sudbury is going up. The population is going up. The investment in the city is going up, right? These are all connected. Now, when people see these stats, investors particularly, they get excited, right? Now the big investors are looking to reinvest in these markets. So these are some of the, now we're at investor attraction here. These are some of the projects that are going on right now. And I didn't capture all of them as we kind of get through the 12 sessions here. I hope to be adding more and updating everybody. I'm going to go over the active projects, but in just a sec. Before I do, I want to show you guys a couple comparison tables, and then we'll get into the active projects. So this is data I pulled. Again, part of the being a real estate investor is you'll notice like some inconsistencies with the data. Like for instance, the only income data in Stats Canada that we could like find to be 100% was actually the income from 2020. Okay, there's no actual income for 2025 that I could find. However, I could find the 2025 prices. So this is not comparing 2025 income to 2025 prices. If I could get that comparison, I definitely would. But everything's still compared equally. Like I'm using the same comparison for Ontario, London, Toronto, Greater Sudbury. Does that make sense, guys? Okay. So what I found is the income in 2020 is extremely high in Sudbury, 74,000. It's literally the same as Toronto. It's insane. This is also after tax income, I believe. Okay. Meanwhile, the same house in Toronto is 1.1 million, selling for 535,000 in Sudbury. Okay. So what this is showing us as investors is that it's still an affordable market. And again, those incomes were from 2020. Since there, they've obviously gone up. right? And if you talk to any mortgage broker, if you're looking to, and I think I've mentioned this to quite a few investors on the call. Um, I find that when you go to a real estate meetup or talk to other investors, everyone is stuck on supply and demand. Okay. They're like, where is everybody moving to? That's the place I want to buy real estate. And I'm showing you that that is actually like not the case because there's other factors involved, like the factors that I just went through. And the reason I'm saying that is because it doesn't matter how many people are moving to Toronto if they're making $74,000 a year and the average purchase price is 1.1 million. They will never be able to buy a home. That $1.1 million house will never get an offer from those people. So it doesn't matter how many people move there, right? The price isn't going to go up. You're not going to see the appreciation, the growth. It doesn't have the other aspects, right? Whereas a place like Sudbury is much more affordable. You know, the affordability multiplier, that's comparing the income to the purchase price. If you talk to a mortgage broker, they're usually telling you 4 to 5 times your income is what you could afford. Ontario, out of the question. London's out of the question. Toronto's definitely out of the question. Places like Vancouver is out of the question. There's, markets like Sudbury, markets like Edmonton are still affordable for people to own a home. And that's a huge attraction for investors that understand this. Okay. And just one more chart before we get into it and just showing you guys kind of like not a deal, but you guys will see how to underwrite deals on, future presentations. But we're buying deals under $100,000 a door, and we're exiting them about 160 to 185 a door, right? That's kind of the real numbers. Renting them for, some of our one bedroom apartments, we're averaging around 1,400, 1,500. Again, this is for our portfolio, okay? And we're renting our two bedrooms for about $1,700 to $1,900 a unit. So it's just massive spreads compared to looking at other cities that are buying for, 200K a door, 300K a door, and they're renting for pretty much the same as what we're renting it for. All right. There's a fancy term here, gross rent multiplier, for more of the sophisticated investors. And you could see majority of Ontario, majority of Canada are sitting at like 10 to 20x multipliers. Sudbury's still very, very reasonable. And that's giving a lot of cash flow to the real estate investors that are buying in those areas. All right. Um, Couple more things, and we're going to look at some actual projects here. I just actually pulled this up today. It's one of the top 5 cities in Canada for housing construction this year. So specifically, permits to build new homes has gone up 113% from 2024 to 2025. It's doubled for build, and we're still going to be short by the 3,800 homes that we need by 2031. Okay, this chart represents, and this is like super technical, but this is representing how much money in permits. So including the construction value, not just like the cost of pulling the permit. This is like basically pulling the permit and the construction value. In 2020, we were at about $66 million. 2021, 134 million. Today, we're at 200, and this was a 2024. I don't think the 2025 has came out yet, but a $282 million of construction permits for residential properties was pulled last year, right? Everything is pointing to appreciation, population growth, rental growth, investors investing capital. Um, the city has a downtown revitalization program, and I'm going to share with you kind of their master plan at the end. We don't have time to go through it, but I'll definitely point you guys in the right direction if you want to read it. And this is basically, Sudbury is a big place. This is kind of the downtown core of what's going on in Sudbury. So there's a Scotia Tower development, Junction East, Project Manitui, I don't know if I'm saying that right, the old hospital development, and the event center. Okay. So all of these are going in this area. And guys, where do you guys think we buy our real estate when we buy it in Sudbury? This is the area that we buy it in. This is the area that we're targeting. Okay, because we're not investing in Sudbury for today. We're looking like what's it going to be in the next 5 years, 10 years, etc. That's how we're going to build generational wealth. So the Scotia Tower, like I said, right in that downtown core, it's a 20, and I'm going to go through these quickly, and we'll wrap up. But $20 million development project for 83 units. This is ongoing, like construction starting, like is already started. Okay, this is the building right now. Panoramic is one of the like pretty well the largest landlord in Sudbury, and they're kind of heading a lot of these large development projects. So what they did is they bought an old office building and they're converting it to apartments. And this used to be like a glass building, so all the glass has to get removed, and they're building balconies on it. It's actually a pretty cool site right in the middle of downtown. Okay, if you've heard me talk about Sudbury before, you've probably heard me talk about the event center. This is a $200 million project going on again downtown core. It's actually happening in this section here. Okay. And it's going to start with a game like a hockey arena, play basketball, etc. And eventually it's going to have like other hotels, retail stores around it. But the first building is the event center. And I'll be honest, like this project's probably going to cost like 400 million. I don't know where they got the 200 million from, but they're definitely not doing it for 200 million. There's no way. But it's a massive project. As you can see, there's some of the renderings from the city website and where it's going. Again, this project is actually on their way. They've already bought all the land that they need to do the project, and they've already bought the like they've already done demos too. They've probably spent like 12, 13 million dollars, I think now, on demoing all the buildings in this area to build this. Okay, so this is not something that's going to happen like it's not going to be constructed within a year. It's going to take many, many years to build something like this, but it's the shovel is in the ground. Um, Project Manitui. I just like saying Manitui now, so that's the new name. This is a $110 million investment, massive amount of units. 826 units are going in this project. So a bunch of senior housing units and also like I guess lower modest income. 476 senior housing units, 350 I think it says like modest, sorry, it's cut off there. And then there's actually 80 daycare spaces. I don't think we can see that, but there's 80 spots for daycare spaces going in this project. Again, construction's already on their way. All these projects have started. This is probably the most exciting thing that's going on in Sudbury right now. I was actually just there later in August, and the Panoramic, as I said, the largest landlord in Sudbury, they've been trying to get permits on developing this for quite some time, and they have the permits and they've already started the demo. So they're building 530 units at this site, guys. So this is the old hospital here. Fun fact, that was I think this is the largest mural in Ontario. I don't know why they did it, but now they're demoing the building and building 530 units. It's going to be absolutely massive. Um, it's yeah, sorry I don't have more of the details here. I could send you guys if you want, but it is comprised of like three towers. They're all different different sizes. So super exciting. And then Junction East, this project is on pause right now, but it's another $100 million investment, 104,000 square feet, and it's going right downtown. Just like it's like a new library, art gallery, spot for culture groups, and it looks like so you can imagine when these buildings are completed, how much that's going to change the landscape of a place like Sudbury. And again, having more jobs created, which wants more people to move there. The shops at Heritage, sorry, again, I think it's a little cut off here. This is a massive project. This is another $200 million project across 25 acres. 25 acres to build shopping centers, entertainment services. It's a massive plaza. And again, construction shovels in the ground on this one as well. So between these projects I've showed you, like I didn't add it up, but I'm pretty sure we're close to $1 billion right now in investments. Okay, by big investors, right? Like massive, massive investors that are putting this. So other things in the future that I didn't really include until now, there is a plan to add more hospital beds and do a redevelopment of the hospital, just making it larger, which it would be a $400 million project, which is, being discussed. There's always mining potential. So companies like Vale, Glencore, working together to expand the mining industry. Sudbury was actually recognized as Canada's least affected city by the tariffs because they're now exporting minerals globally. Like literally like meeting, CEOs of these companies like Vale, Glencore, meeting with like country leaders in Japan to learn how to ship their minerals directly there. Like this stuff it's a big deal that's going down. Okay. I like the term flywheel because what's really happening right now, it's like it is the flywheel effect, right? Like I showed you at the beginning that when you get the jobs being created and people investing money into the city, it triggers everything else. Okay. It triggers that whole like that whole increase of prices, generational wealth, etc. So what you have here is a flywheel where it's already triggered, and now you have more reinvestment, which is going to bring more jobs, more appreciation, and it's just going to go around this flywheel. Now, eventually, it will get stopped. It will slow down, just for affordability reasons, like we're seeing in other markets right now that have slowed down. But right now, it's been prime opportunity because it's still very affordable. The Sudbury also has like a downtown executive a summary of where they really keep the master plan of what they plan to do with the city over the next, 1 to 3 years, 5 to 10 years, etc. And that's honestly all available on the city website. So happy to share if you guys wanted to take a read. Pretty dry, so I'm not going to go through any of that. But ultimately, this is what creates the general uh, generational wealth security. We started again with the job growth, right? We looked at that, how the job growth is forcing people to move there to take the jobs, increased rental demand, decreasing vacancies, rents are rising, property values growing, investors are attracted, and ultimately this is what we want. This is why on our iOS model, this is why we only invest in Sudbury. And I get asked this all the time. I'm in London now. Zach, why don't you invest in London? Why are you investing in Sudbury? Like, this is the reason. Watch this presentation. Like, there's not many cities in Canada that have this type of opportunity right now. Okay. These are some of the referral websites I use. Again, I can show you guys all these slides as well. Um, and what I created, and I'll make sure to send this download out. You can scan the QR code if you want, but I'll make sure to send it out with the replay, probably tomorrow. What I created is this iOS market compass that I know some of you are eagerly awaiting. And ultimately, when I scroll down, let me just scroll down to the bottom. So what it is, it's a way that you guys can use this tool to analyze any real estate market. And I wanted to make something like simple and practical that you could just print out and use just to get a quick analyzer of the market. So looking at things like employment, population increases, all of these stats on the left-hand side are fairly easy to find online using the websites. Okay, like Stats Canada, I could share with you where I got the data. And all you're going to do is go down to on the second sheet of this, it's literally telling you exactly how to use this. So, first you would enter the city you want to work in. You're then going to rate each driver. So each driver would either be rated a 0, 0.5, or a full 1. 1 would be the highest score. So you'd rate all of it, tally the score, and then interpret the compass. So really anything 9 to 10 is a prime market, super, super strong. 7 to 8.5, strong fundamentals, still got a good upside. But where you need to be very careful, guys, is the last two. 0 to 6.5. Those markets, especially 0 to 4, that's a landmine. Like you would not want to be investing your money in there. You will not build generational wealth, no matter how good the deal is or how good your property management are. You need the market to really be behind you in that tailwind. So here's another. This is showing kind of like how to rate it. So for instance, if your unemployment rate was, below 5.5%, then you would get then you would get a 1. If it was below 5.5 and you had $200 million projects, I'll let you guys kind of read through this, but each of the questions here has a chart that you can refer to and kind of use it, and it's measuring everything from like, policy, which is like the landlord tenant board, to supply balance, to affordability gap. It's a pretty detailed sheet. I already went ahead and did this for a few markets. Like for instance, first market I did was London. I actually scored a 5 out of 10. Toronto was a 7. Edmonton was an 8.5. Although, could be definitely a 9. I was kind of 50-50 on one of the points. And Sudbury scoring a 9.5. The only one that didn't score a full 1 was actually the paralegal, the landlord tenant board acts, just because we're in Ontario here. Great question, William. So I did not do Vancouver. But again, that could be something for you to do. So I did score Toronto a 7 on it, and there is a link there to the score that I did. So if you did this QR code, it will take you to the document. Again, I'll send you guys all this stuff after as well. Um, and yeah, it's just a good tool that we've been using, and I kind of compiled it. I've seen other investors, use tools like this before. And I just wanted something simple and practical. So in no means, you're doing this and it's rated an 8 out of 10 and you're like, yeah, I'm going to go buying that city. Of course, there's other due diligence that you guys are going to need to do as investors, but it's a great starting point for like being able to measure the market on what it looks like. Okay. Like what I find with cities like Toronto and Vancouver is you're just not gonna, you're not really gonna have any of the cash flow. So the affordability, the cash flow is gonna score very low, right? Because you're not, but at the other side, maybe you don't want cash flow, and that could be a good market. It could cash flow if you put 40-50% as a down payment. Um, so I hope you guys learned something. Um, the next presentation we do is going to be specifically on lead generation. Okay. And I'm going to be honest and share with you why most investors are failing at lead generation and what are the few strategies that we're doing that are actually having success. Because I see too often, there's a lot of books on this subject being like, here's 100 ways that I can generate a lead. It's like, well, that's great. That's great. Let me do 100 different things. That sounds terrible. So I'm gonna go probably into really detail on like 2 to 3 things that we're doing as investors that are really working to generate our leads in Sudbury because a lot of the properties we buy are not on MLS. And then if you can get that information and apply it to your market, or we can give you suggestions. But that's kind of been our philosophy. We're not going to reveal 100 ways to generate leads. We're going to focus really tight on 2 to 3 that are actually working for us. Okay, so that's going to be 2 weeks from now, October 9th at 5:30. If you're on this call, or watching the replay, you're automatically going to get signed up and invited to it. If you do not want to attend, just let me know. Just say, you know what, Zach, it's great. Just take me off. Otherwise, you're going to get an email and it's going to say, here's the details for the call. All right. So everyone's automatically enrolled in that, and you'll be continued to enroll in all 12 of the calls until we finish. So with that being said, happy to take any questions. I know I had some questions like before everyone jumped on here, which I'll go through. But if you guys have any questions, feel free to unmute yourself. If you're looking for active investment opportunities in Sudbury, I will send a message out and we can definitely book a one-on-one call to chat. Or if you just want to stay on the call and go to these 12 sessions, they're 100%, like I said, free, and they're just really to provide pure education. So whatever you want to guys do, whatever you guys want to do. And again, I'll make sure you all get the iOS Compass as well so that you could give it out. If you're a realtor, you can give it out to some of your clients. If you're investors, maybe you can use it yourself, and just spread the word about about Sudbury and what we got going on. So yeah, I'll open the floor. Any comments, questions? Again, appreciate everyone jumping on. One of the questions I got in a DM was how would we work together? And if that is the case, just send me a message and we'll connect just on a phone call just to see if it's the right fit. We have a couple active projects right now as well. But yeah, I can't believe I got through all that. It's 6:20. That's amazing. Any questions from anyone about any of the slides? I hope I didn't put everyone to sleep. Or I gave a party emoji. No worries. No worries, William. Thanks for tuning in. If you need to hop off now, absolutely you can hop off. Maybe closing this soon. Any questions or comments, guys, before we get off? Yeah, thanks, guys. Thanks for joining on, Ja and Roy. Appreciate it. And if you guys are looking at investing in a different market as the active investor, I would challenge you to really kind of use this presentation to create your own in the market that you want to focus in. I think it's kind of been eye-opening for me to really find out these new projects. Like it was at a point where there's probably half a dozen more things that I wanted to put on these slides, and at the end of the day, just ran out of time. But yeah, it's just everything's really connected, and I'll make sure to send you guys the PDF of just the market fundamentals and how everything is growing, starting with job growth, population. Yeah, no problem, Connor. All right. Thank you all for joining. I'm going to end it there. And again, I'll send you guys all the replay in the next day or two, and we'll have a good night.